Hello everyone. Once again, the dollar weakened against all the currencies we track, both all of the G10 currencies and all of the emerging market currencies, as expectations of tapering in the US fade. Looking at the Fed funds futures, it's clear investors are pushing out the probable date of Fed tightening. Part of that may be because of the disappointing non-farm payrolls last week. Also, though, another theme in the market is the idea that with President Obama struggling with Congress over Syria, he has less political capital to push through the unpopular Larry Summers to replace Chairman Ben Bernanke when the latter's term as Fed chairman ends next January. That makes it more likely that Janet Yellen, the current deputy chairman of the Fed, gets the post. Yellen has been a big supporter of quantitative easing and is known to be more concerned at this point about growth rather than inflation. The market reasons that if she's nominated, the Fed is likely to keep interest rates low for longer than would be the case if Summers got the job. Now, it's notable that the commodity currencies and the Norwegian krone were among the largest gainers yesterday, despite further falls in oil prices. This suggests that the markets are discounting a stronger global economy. That might also explain why the Swedish krona was the biggest gainer. The Swedish economy is highly leveraged to global growth. If this is true, then I think the U.S. economy is likely to overcome this recent soft patch in employment data, and tapering should commence sooner or later. The question is whether the FOMC will be content to wait another month. Now, yesterday, the dovish San Francisco Fed president, John Williams, said that recent economic data signaled gradual job market improvement in line with his expectations. That suggests to me that the Fed could indeed start some tapering at the September meeting next week. A Bloomberg poll taken after the payrolls data showed that economists expect the Fed to taper bond buying by $10 billion at the meeting, which I think this sort of mini tapering could surprise the FX market and push the dollar back up. But until then, we're likely to see further gains by the commodity currencies in particular. They've been severely depressed recently and are due for some sort of a bounce back. Now, we already got the only European indicators for the day already. In the UK, the Royal Institute of Chartered Surveyor, the RICS house price balance, which shows the percentage of surveyors who see house prices rising minus the percent that see prices falling. It rose to 40% from 37%, which was above expectations of 39%, and I think that could boost sterling today. We also got French industrial production, which was very disappointing at minus 0.6% month on month in July versus expectations of plus 0.5%. I thought the recession in Europe was over, but maybe I'm wrong. In the US, the National Federation of Independent Businesses Small Business Optimism Survey for August is forecast to rise to 95.0 from 94.1. That's important as small businesses are major employers. Also, the job openings and labor turnover report, the JOLTS report, is expected to show 3.9 million job openings in July. That's down slightly from 3.936 million in June, but remember the June reading was the highest level in 5 years. So, down only slightly from that would show a relatively healthy job market, even though the number of jobs being added each month in the non-farm payrolls has been falling recently. It could aid the case for tapering and thereby support the dollar. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.